Ron Siegel Radio, your home and mortgage connection.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family, your business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan or plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference. 800-306-1990, 800-306-1990. And yes, we're celebrating today. It's National Corn Fritters Day. I don't know. I like corn on the cob, and they say corn fritters is the easy way of getting away around that. Drop everything, heat up the oil, fry up a batch of the crispiest, most flavorful bites of summer, packed with sweet, juicy kernels, held together by a light golden batter. Little morsels are pure comfort food. I like comfort food. I've beaten anorexia. While they are certified crowd pleaser all year round, making them with peak season fresh summer corn takes this celebration to a whole new level. Yeah, I'm a big fan of corn on the cob too, so that's a whole different story. Let's see what the markets are doing today. Well, we had a couple of strong days. Now we're going the other direction. We've got the Dow Jones Industrial Average up 99 points. The Nasdaq's down 201 point right now. Ow! Yeah, that's not good. S&P 500 is down 15.11. Oil down 19 cents a barrel. Not a big move there. And gold is down another $60 an ounce. Oof. Down over 20% since the peak just a couple of months ago. 10-year Treasury's up 2 basis points. And the mortgage bond is down. Bond down, rates up. Just simple math. So what's going on here? Now, I'm going to tell you something that you're probably not going to hear anywhere else. You can say you heard it first on Ron Siegel Radio. So the markets are unbelievably intelligent. You get talking heads that come on the news and they say, well, gas prices are going up because of what's going on in the Middle East. Okay, maybe. And I look at what's going on in the Middle East and I say, okay, I understand that all that. And I understand gas prices up nationally 5 cents a gallon since yesterday. California, yeah, we're out of the world. We're at $5.41 a gallon. So we were only up 3 cents a gallon in California since yesterday. A month ago, California was at $5.71, so we're down 30 cents. But $3.94 is the number we're talking about right now. That's the national average of a gallon of gasoline. But why do I say that the markets are very, very intelligent? Well, there's oil going through the strait. How do I know, sitting in my studio here in Orange County, California, that there's oil going through the strait? Because I'm looking at what's happening in the markets. When we had the strait closed down, WTI oil was up in the $100 a barrel range. It's not there right now. It's trading at $79.58 a barrel. So why would the markets be telling us? What are the markets telling us here? The markets are saying that there is not the same supply shortage that we were thinking there was when the war first started. When the war first started, in the first couple of months of the war over in Iran, we saw oil prices jumping dramatically because there was no oil going through the strait, or we thought there wasn't. There's reports that maybe there was. But the issue here is if oil is at 79.61 a barrel, that's telling us there's oil going through the strait. Now, you can hear the talking heads say one thing. You can hear Iran saying one thing. The markets are telling us what's really happening because the markets are dollars and cents. That's where the people are putting their money. They understand that. So you look at it, you say, okay, 79.62 is what it's trading at right now. It's not a shortage of supply. Now, are the oil companies making a boatload of money? Well, you just look at their earnings reports, and they tell us, yes, the earnings reports are saying that they're making double and triple what they normally make on the oil company side. I'm not saying the gas stations themselves. And you certainly don't want to go and talk about what's going on in California because we know that California makes a lot of money on oil and on gasoline. Our taxes and fees and excise taxes and surcharges and everything else they want to call, well, we're about $1.20, $1.30 a gallon is what we're paying in all these different fees and charges and taxes. And that's why California right now is running about $1.50 a gallon, more than the national average. So when we hear Gavin Newsom say that it's the oil companies gouging Californians, no, it's the state of California that's gouging Californians. Where that's not the oil companies. Now they're gouging the whole country, but nothing special on California. And again, you look and you just say, okay, there's oil moving. And the safe havens of where people are constantly worried about, we know that that's not happening. What are the safe havens? 10-year Treasury or U.S. Treasuries. Those are always safe havens. If there's a worry about the financial markets, funds go into the U.S. Treasuries. Well, that's not happening because otherwise we would see the bond numbers affected in the bonds. We'd also be looking at gold prices going up. They're not. Gold is going down. $61 an ounce. It's down today. So we're watching these things. The markets know better than the talking heads. And the problem is the talking heads don't do their jobs anymore. They used to. It used to be that you could turn on the news and get news. Now you get opinion. You get commentary. Turn on CNN, you get one set of story. Turn on Fox News, you get a whole different set. Turn on Ron Siegel Radio, we're looking at all of them. I've got on my screen reports from Reuters, from CNBC, from Investing Line, from Realtor.com, MND, all on my screen right now so I can watch and see what's going on everywhere. So I can report that to you. All of this is what we see when you come tune into Ron Siegel Radio. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, think nobody's buying homes right now? Think again. From a one-time bonus to long-term liquidity, no difference in your income. We're going to show you what it means. Stocks just had their best quarter in 6 years. Your house made money too, and we'll show you the math on that as well. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you missed any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452. You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's...
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by rsrloans.com, rsrloans.com, and every day at this time, OBMMI. They provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates, with consumers across 35% of all mortgage transactions nationwide. They don't tell us points paid, points received, or the APR. They tell us the number you put in your mortgage calculator to determine your principal and interest payment. What did rate? Oh, you don't have a mortgage calculator? Get it. rsrlinks.com/calculator, rsrlink.com/calculators. Rates yesterday looked pretty good. Most of them were down. Conventional 30-year fix, 6.535 down. Jumbo 30-year fix, 6.538 down. FHA 30-year fix, 6.284 down. VA 30-year fix, 6.177. That was the only one that was up. We don't like it when the VA loan goes up. And the USDA loan, generally zero down payment. Rural areas, property's got to qualify. Individual has to qualify. 30-year fix, 6.303. And yes, every week we do put out our weekend update, rsrlinks.com/WUC. Weekend update, WUC. Weekend update for consumers, as opposed to the one we do for the financial advisors, realtors, insurance agents, all the financial people. So we do put out two of those. What's driving the market today? What's happening in the market today? I'm going to tell you. S&P 500 right now down 25.79. Oil down 22 cents a barrel. 10-year Treasury up 2.5 basis points, 4.57. And the mortgage bond down 12 basis points. Bond down, rates up. It's just math. Let's see what's driving it. Well, we're watching the WTI trading around $80 a barrel. Stocks and mortgage bonds are both lower after Iran issued a warning. Iran warned that the Strait of Hormuz is an unbreakable red line and said it would destroy oil infrastructure across the region, including in neighboring countries. Where have we heard this before? I mean, it's amazing. They keep on giving us all this bluster, but thankfully they can't stand behind what they've been saying about all these things. You know better than that. So they did warn that they're going to destroy oil infrastructure across the region, including in neighboring countries, if the U.S. followed through on threats to attack Iranian power plants and bridges. As a result, oil prices are moving higher, or they were. Now they're not. Retail sales rose 0.2% in June, which was in line with estimates. The previous report for May was revised higher by 0.1%. This headline figure includes gasoline, and it measures the total dollars spent. So lower gas prices in June weighed down on this figure, but it was still higher. The controlled group, which gets plugged into GDP and strips out automobiles, gasoline, building materials, and food, and removes the impact of lower gasoline prices during the month, rose 0.5%, which was also in line with estimates, but a pretty strong figure. Additionally, May was revised higher by 0.1% to 0.8%. Cotality released their new rental report for May, showing that prices are up 1.3% year over year, which is a slight increase from the 1.4% in the previous report. For perspective, rental prices were up 2.6% at this time last year. So we're clearly seeing a slowdown. This appears to be finally showing up in the CPI inflation report earlier in the week, where shelter was very tame and helped overall inflation. We hope this continues. Initial jobless claims measures individuals filing for unemployment benefits for the very first time, fell 8,000 to 208,000. Continuing claims of those who continue to stay on benefits after their initial claim fell 16,000 to 1.81 million units. That is the Mortgage Minute, brought to you by rsrloans.com, rsrloans.com. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, think nobody's buying homes right now? Think again. From a one-time bonus to long-term liquidity, same income, we'll talk about it. Reach me anytime. Off-air number, 800-306-1990, 800-306-1990 or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. Think nobody's buying homes right now? Think again. If you've been thinking about selling, you've probably seen plenty of headlines suggesting buyers have just about disappeared. But there's a big difference between a slow market and a stalled one. Yes, mortgage rates are still higher than most people would like. Homes aren't selling as fast as they were. And every week seems to bring another headline about buyers sitting on the sidelines. But here's what you have not heard. Despite everything going on, buyer demand has been remarkably resilient. In fact, more sellers are getting to put up the pending sale sign now than during the last 2 years. What's even more surprising is that they're doing it at a time of year when activity usually starts to slow down. And if you're thinking about selling, that's a trend worth paying attention to. One of the best ways to measure buyer demand is by looking at pending home sales. Those are the homes that have gone under contract but haven't closed yet. Think of them as a real-time pulse check on the market and whether buyers are still buying. Housing Wire data shows more homes are going under contract at the same time the past 2 years. If you're watching us on ronsiegelradio.tv, any of our socials or the ABC News and Talk AM 1490 or FM 98.1 video feed, you are seeing a chart pending home sales higher than the last 2 years. While it may come as a surprise, the numbers speak for themselves. It doesn't mean buyers are everywhere, but it does mean they're still active right now. And even if this ebbs and flows a bit in the weeks ahead, right now we're still ahead of where we've been lately. That's encouraging news if you're thinking about selling because it tells us something important. People have not stopped buying homes. Serious buyers are still making moves. And a lot of these people are buying because they decided they can't keep waiting. Whether it's a growing family, a new job, retirement, or simply wanting a different home, life keeps moving, even when mortgage rates stay higher than we'd like. As Lawrence Yoon, chief economist at the National Association of Realtors, NAR, explains, quote, a late spring buyer rush, even with mortgage rates not budging, is an indication of pent-up housing demand and consumers' acceptance of above 6% mortgage rates as the new normal, unquote. So if you've been worried no one's buying, this data should give you some confidence. Today's buyers aren't just casually browsing open houses on Sunday afternoon. They've spent months waiting for rates to improve, and now they realize they can't wait anymore. That means they have a purpose and a timeline, and that's exactly the kind of motivated buyer you want to work with. What does this mean for your sale? Does that mean every house will sell instantly? No. Today's market is more balanced than it was a few years ago. So you can't just price your house however you want or skip preparing it for market. Now buyers have choices and they're willing to wait for the right home at the right price. But sellers who understand today's market and price and position their homes right are still finding success because the idea that no one's buying right now just isn't supported by the data. Want to sell your house for the most money and the quickest possible time? rsrlinks.com/salesmax. rsrlinks.com/salesmax, where we show you exactly how to do it. The buyers are there. The opportunity is there. The key is having the right strategy to capture it. Bottom line, this year's housing market may be moving slower than many of us hoped, but buyer demand is more resilient than the headlines suggest. If you're wondering whether there are enough buyers for your house, let's connect. I'll show you what's happening in your local market and build a strategy that helps you take advantage of the momentum that's already there. You want to know what's going on in your market? It's pretty simple. rsrlinks.com/myhome. rsrlinks.com/myhome. It is a report on your house, your neighborhood. What's going on every month? We'll send you updates. rsrlinks.com/myhome. That's the real-time real estate segment brought to you by rsrmoney.com. rsrmoney.com. Your Credit Matters segment today being brought to you by rsrlinks.com/debt-free. rsrlinks.com/debt-free. You just got a bonus or maybe some money landed in your lap from a relative or an estate. It feels great, and then comes the part nobody prepares you for. What do you actually do with it? I'm Ron Siegel, Certified Liability Advisor, helping families build wealth through strategic debt management. Here's a number that surprised me. In 2024, the average work bonus was about 2.8% of a person's yearly salary. That's real money. And whether your windfall is a few $1,000s or a lot more, the thrill is the same. There's nothing wrong with having a little fun with some of it, but a windfall is a rare chance to do something that changes your finance for years, not just for a weekend. So let me ask you this. What does this mean for you? Most people treat a windfall like it is burning a hole in their pocket. They spend it fast. 30 days later, the money is gone, and they cannot tell you where it went. I want you to slow down and run it through a simple filter I use with every family I meet on Zoom. 3 questions: safety, liquidity, return. Safety asks, does this protect my family if something goes wrong? Liquidity asks, can I get to this money when I need it? Return asks, is this money working for me instead of sitting there? Strategy beats rate always, and a windfall is where that idea really shows up. Let me walk you through the smart moves in order. First, high interest debt. The average credit card right now is around 20%, maybe 22%. Think about that. If you carry a balance, paying it down is like earning a guaranteed 20% return with zero risk. There is no investment on earth that beats that safety. So if you're carrying credit card debt, that's usually the first place a windfall should go. Second, your emergency fund. If you don't have one, now is the time to start. If you do have one, take a look at it. Life got more expensive over the last few years, and a fund that felt comfortable in 2021 might be thin today. This is the safety and liquidity part of the filter working together. Third, your future. Review what you are putting into your retirement accounts. A windfall can let you bump up your contributions without touching your monthly budget. And if you have kids, college may be on the horizon. Setting aside part of a windfall now is a lot easier than scrambling for it later. Now, here's where I want to challenge some common thinking. A lot of people hear the word windfall and immediately think, I'll use this to pay down my mortgage. It feels responsible. But pause on that. When you throw extra money at your mortgage, that money is gone. It is locked in the walls of your house. You cannot spend it. You cannot invest it. You cannot get it back without borrowing or selling. You traded liquidity for a feeling, and in most cases, the mortgage is the cheapest money you'll ever have. Your credit cards are not. This is why I care more about your household blended interest rate than any single loan. Your blended rate is what all your debts cost you when you look at them together. A windfall aimed at your 20% credit card lowers that blended rate far more than the same dollars aimed at a low mortgage. Same money, very different result. Let me give you an example. Picture a family in California with a mortgage around $650,000. Home values here run about double the national average, so that's a normal number for a lot of folks listening. Say they get a $15,000 windfall. One path is to send it all to the mortgage. It barely moves the payment, and now that cash is trapped. The other path is to wipe out an $8,000 credit card balance at 20%. Top up the emergency fund and the rest to a retirement account. Same $15,000, but now the family has less risk, more liquidity, and money that is actually working. That is where strategy beats rate always. And yes, if one of your goals is a home, a windfall can be the start of a down payment. Or maybe your goal is a big trip you've been dreaming about. That's fine too. The point is not to never have fun. The point is to decide on a purpose instead of by accident. So here's what I want you to do. Before you spend $1 of that bonus, get a clear picture of where you stand. I offer a simple tool that helps you map your budget, keep your debts, and your best step. You can find it at rsrlinks.com/keysteps. That's rsrlinks.com/keysteps. Start there and let the windfall do 3 jobs at once instead of just one. I'm Ron Siegel, your Certified Liability Advisor, helping families build wealth through strategic debt management. Thanks for listening to the Your Credit Matters segment, brought to you by rsrlinks.com/debt-free, rsrlinks.com/debt-free. And remember, when you go to rsrlinks.com/debt-free, if you look at the tile on the right, it'll let you put in information, no cost to you. You put in your information in there, and it's going to go through and look at what are the best ways of using money to become debt-free. It's a debt done date calculator. Say that 3 times fast. Debt done date calculator, and it'll help you figure all that stuff out right there on there. And it's for free. If you want to have somebody help you, coach you through the whole process, yeah, that costs a couple of bucks. Not a lot, but it'll cost a couple of dollars. But you can find out the strategies for absolutely no money at all. rsrlinks.com/debt-free. You are listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, stocks just had their best quarter in 6 years. Your house made money too. We'll show you the math and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you missed any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's...
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Borrow Smart segment today being brought to you by rsrwealthbuilder.com, rsrwealthbuilder.com. The Dow crossed 52,000 for the first time in history this quarter, but the biggest financial gain in most households did not show up on a brokerage statement. It showed up under your roof. I'm Ron Siegel, Certified Liability Advisor, helping families build wealth through strategic debt management. Today, I want to walk you through what actually happened in the second quarter because it was a big one. And then I want to show you the number almost nobody is talking about, even though it matters more to most families than anything the stock market did. Let's start with the markets. The S&P 500 rose 14.87% in the second quarter. The NASDAQ gained 21.41%. Those are the best quarterly gains either index has posted in 6 years. The Dow climbed 12.9% and crossed 52,000 for the first time ever. And the Russell and the small company stocks, the Russell 2000, logged its best first half in 35 years. What drove it? A few things. Tensions cooled in the Middle East and oil prices fell to their lowest level since February. Corporate earnings came in strong, and we have a new Federal Reserve chair. Kevin Warsh took over this spring, and at his first meeting in June, the Fed held rates steady at a target rate of 3.5% to 3.75%. In his press conference, Chair Warsh made one thing clear. He's focused on getting inflation back down to 2%. Speaking of inflation, there was decent news there too. Consumer price rose 0.5% in May, slowing from the months before. And here's the detail that matters. More than 60% of that increase came from energy. Strip out food and energy, and core inflation rose just 0.2% cooler than expected. If energy prices keep falling, the inflation picture could keep improving. The job market stayed solid. Employers added 172,000 jobs in May, more than double what economists expected. Unemployment held at 4.3% for the third straight month. Now let's talk housing, because this is where it gets personal. Sales of existing homes jumped 3.2% in May. That was the biggest monthly increase all year, and it happened for two simple reasons. Mortgage rates dipped in April, and more homes came on the market. Buyers noticed and they moved. The median existing home price hit $429,300, up 1.3% from a year ago. That makes 33 consecutive months of year-over-year price increases. Almost 3 straight years of home values rising month after month. And here's the number nobody talks about. Over the past 6 years, the typical U.S. homeowner has gained $128,100 in housing wealth. Here in California, our home prices run roughly double the national numbers. So for many locals, homeowners, that figure is closer to $256,000. So what does this mean for you? Think about it this way. Your 401k sends you a statement every quarter. Your bank app updates every morning. But your largest asset, the one you sleep in every night, never sends you a thing. Most homeowners can tell you what the S&P did this week and cannot tell you what their own home is worth this month. That's backwards, because that equity is real wealth, and you can't make smart decisions about wealth you have not measured. Now, before anyone gets the wrong idea, I'm not telling you to rush out and pay off your mortgage early. I never recommend that. It locks your money inside the walls of your house and hurts your liquidity. The goal is to know what you have and to put it to work on purpose. Strategy beats rate always. Figure out what you have. Claim your house report. rsrlinks.com/myhome. rsrlinks.com/myhome. Looking ahead, forecasters project median home prices to rise about 4% in 2026, and existing home sales decline 14%. The Fed meets again July 28th and 29th, and investors will be watching for any hint about where rates go next. This is what I would do this weekend. Get a real picture of where you stand. I offer a free tool that shows you your budget, your credit, and your assets all in one place. Go to rsrlinks.com/keysteps. That's rsrlinks.com/keysteps to get access. And if you want to track your home's value specifically, I also offer a monthly value report at rsrlinks.com/myhome. rsrlinks.com/myhome. Because the families who build wealth are not the ones watching the ticker. They're the ones who know their own numbers. I am Ron Siegel, Certified Liability Advisor, helping families build wealth through strategic debt management. Thanks for listening to the Borrow Smart segment, brought to you by rsrwealthbuilder.com, rsrwealthbuilder.com. And as always, I ask that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean who are engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money. You can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.